data in financial services, right? All of it has to be localized, or it's only the RBI that makes rules. Uh, there is nuance in each one of those, and we're hoping that at the end of the session, all of you will take back some of that. The second bit that we're trying to achieve is to give you a overview of where to look for specific reasons. If you are an insured tech player and you want to, export insurance data from India to, let's say, Singapore, is that possible? What kind of protections should you have? Where within the law would you look for all of that? And finally, kind of give you a toolkit as to how to navigate the compliance aspects of all of this. So that's fairly minimal. Given an hour, I don't think we can achieve more than that. The presentation will be primarily led, I'm going to be quiet, will primarily be led by Adya, who looks at data protection issues, and Ankita, who works exclusively within financial services. What I will do is just kind of try and set the scene, give you an analysis of where we're going and how this will go. But beyond that, keep mum. So firstly, we'll take you through the cybersecurity requirements. We'll take you through breach notifications. We'll take you through data protection obligations, localizations and transfers. Do a little bit of a comparative analysis of what each regulator requires each one of these entities to kind of conform to. But regardless, there is a common thread that runs through most of these regulations. Hopefully, we'll identify that, but that is not an invitation. If you're, for example, a securities broker, to say, hey, I've complied with the RBI, and I'm kind of going to assume that I comply with what the SEBI requires, that just doesn't work. And if there is time at the end of 1 hour, we'll try and look at some of the sexier topics around telemetry, observability, artificial intelligence. Can we make a machine unlearn what it has learned, and all of those other issues that might come up within the same space. House rules are number one. We think that a conversation is always more fun than a monologue. So please stop us if you have questions, if you have observations, if you have disagreements, please do. And secondly, at any point, even if you just want to, if the conversation is too basic for you, or it's not basic enough, please feel free to stop in and guide us on how you would like this to flow. What are we going to look at for compliance? We look at compliance, and there's a mixed bag. I think I'll quickly look at the attendees list. There are people who work in banks. I think there are people who work in non-banking financial companies. And there are people who work as technology service providers and a lot of fintechs. So we're going to try and take you through how the regulations flow from the regulator, the RBI, the securities regulator, the pensions regulator, and the insurance regulator, to the regulated entities, how they then flow down to technology service providers, or even startups who are not technology service providers but are outsourced entities, for example, within the banking context, right? How these regulations flow down there, and what kind of obligations typically flow down to you. So we're not going to restrict ourselves to what the RBI says, because that would be a very regulated entity perspective, but also what typically we see in the market in terms of the obligations that, say, a digital lender would have to comply with, or obligations that a securities broker would have to comply with, or a reseller, an insurance reseller would have to comply with. So we'll try, time permitting, to go through all of these. If they don't, we'll give you cheat codes that you can use for yourself and figure out what your specific obligations are. Again, part of the overview, One of the things we keep hearing from players in the market is, hey, I'm ISO 27001 compliant, or I'm ISO 27701 compliant. And therefore I'm the scary observations I've heard is, when therefore I'm GDPR compliant, which is scary. But even that I'm compliant with RBI and SEBI requirements, ISO and the various certifications you could get under that should give you a semblance of comfort, but is nowhere close to complete compliance. So you would have to look at regulatory concerns when deciding technology protocols. You'd have to look very closely at regulatory concerns when looking at outsourcing and downstream obligations, both if you are the recipient of data as well as if you are the transfer of data. ISO is good, not in any way saying that it's not. You'll have to look at cybersecurity certifications beyond ISO in some cases. And you'll also have to look at your internal and external policies, access control, how do you share data, vendor management, what kind of consent do you get, how does all of that flow down to different people within the ecosystem. All of that you kind of have to evaluate within the broad realm of data governance, cybersecurity requirements. Yeah. With that, on breach response, again, okay, before I hand it over to Adya, who really is the expert, just remember that with a lot of these, in addition to sector specific regulations, you've also got the general law under the Information Technology Act that would apply to you, right? Funny conversation, we were having a negotiation with one of India's largest lenders. And obviously, being one of the largest lenders, they were fully compliant with RBI requirements. But they were a little shocked to find out in the course of the negotiations that some of the requirements of the Information Technology Act and the data protection rules under that are actually, I wouldn't say, impose a higher threshold than the RBI does, but impose a slightly different set of requirements than the RBI does. So just putting it out there that there is all those general laws that you'd also have to comply with. And some of that actually in the context of financial services is actually quite onerous, because one of the principles encoded in the data protection rules is that if the transferor has the obligation to ensure that whatever levels of data protection security procedures that they implement, they'd have to ensure that anybody they transfer that data to implement an equal or higher standard of protection. And if you're getting data from, say, a bank, that is a very, very high threshold. So with that, Adya, do you want to step in and kind of take over breach response?
Sure. I think breach response forms a very important part of your internal processes and protocols. And it also, to some extent, goes hand in hand with your cybersecurity processes, because often within organizations, it's the same team, typically your security operations team or your IT team or your ISEC team that is handling your both security protocols as well as your breach notification protocols. Now, as a general observation, breach notifications and incident management in India have got very hard in the last 1 year, since CERTIN, which is the cybersecurity nodal authority in the country, issued a set of directions last year that basically require organizations to report almost all types of incidents within a very, very short timeline. Effectively, if you've suffered a security incident, and mind you, the definition of a security incident under the law is far wider than, say, a personal data breach. So technically speaking, any unauthorized access to your IT system or a data leak that doesn't involve personal data needs to be reported to CERTIN within 6 hours. Now, obviously, that was met with a lot of uproar and controversy. But what we have seen over the last couple of months is that Certain, firstly, is a very active cybersecurity regulator, very proactive, engages a lot with companies, goes back and forth, asks a lot of questions. So, by and large, as a general compliance yardstick, businesses need to have processes in place that enable them to meet these 6-hour timeline notifications. Now, for businesses that operate within the financial sector space, your breach notification management gets a little more complicated, because apart from complying with these 6-hour timeline notification windows, depending on the type of regulator whose ambit you fall within, there are additional notifications that you have to make. So for example, if you're an entity regulated by the RBI, depending on the framework that you are subject to, whether as a bank or an NBFC, there are timelines, and those timelines, mind you, are shorter than the 6-hour timelines, sometimes going to between 2 to 6 hours to report cybersecurity incidents to the RBI. If you are a publicly listed company, you have certain obligations to report certain types of incidents and certain types of technical glitches to SEBI. But in addition, you've got obligations to report incidents to the stock exchanges that you are listed. If you are an insurance company, then there are additional breach notification requirements that apply to you. So what ends up happening when you are, within the company trying to evolve corporate governance processes, trying to evolve processes to think about and preempt breach notification as opposed to tackling these matters in a reactive manner, what you typically need to do is first understand how every regulator manages incident managements, what the timelines are, and what the processes are. And we've, for example, got a client that is regulated, unfortunately, of course, under the IT Act, by SEBI, by the IRDAI, by PFRDAI, and because of certain contractual obligations with banks, by the RBI as well. So what ended up happening when we were working with this client was to navigate the breach notification process for 5 different regulators, where you've got different timelines, you've got different reporting processes, and almost all incidents have to be reported within 10 hours of knowledge of occurrence. So as a company, what you must do is perhaps think about, firstly, mapping all the obligations that apply to you. That's number one. Number two, putting together processes. One is, of course, your mitigation processes, which is where your cybersecurity compliance, your certifications, and your audits come in handy. But also training teams to be able to handle incidents, seeking cyber liability insurance, having empaneled, say, forensic investigators, lawyers, ransomware negotiators on board who you can quickly call on should an incident occur. Because, and just maybe from a statistics perspective, this time last year, we were probably reporting on behalf of our clients, maybe an incident a month. Over the last 10 months, I think we're doing about 3 incidents a week. And just considering the rising cybercrime levels, the heightened regulatory attention that is coming from organizations like Certain and RBI, it's important from a compliance perspective to have these processes together. So what you can think about as an organization is, apart from training, apart from setting up teams that are well equipped to deal with this, putting together an incident response plan, putting together SOPs that enable your business teams, your external consultants, and kind of guide them through the procedures you've implemented when you're tackling a security incident. We often get questions about situations where we've got employees that have gone rogue, stolen a database, or we've got a ransomware attack. How do we handle it? By and large, under India's existing regulatory landscape, what ends up happening is almost every type of incident, including an employee going rogue and taking their database with them, transferring it to their personal, say, email accounts. All of these incidents on some level or the other, trigger your breach notification obligations. So important from a process perspective to have SOPs that help you, help your teams, and help your consultants navigate the space when an incident occurs. By and large, it's better to preempt the incidents because they're not going away. Evolve situations and evolve protocols that will help you navigate it. And it helps in our experience when companies have systems as opposed to scrambling in the last minute to figure out whether you can meet a 6-hour timeline or whether you can't. Maybe moving on from your cybersecurity and breach notification requirements, tackling some of the data protection questions that often come up when we're thinking about compliance. Ankita, do you maybe want to touch upon consent and localization?
Sure, of course. So just quickly, like Matthew already mentioned, there is a general data protection regulation that at least that stands as of today, while the draft bill is still pending, which imposes fairly simple consent parameters on different entities while accessing personal data and sensitive personal data. However, with the kind of data that entities are accessing, the sheer volume and nature has required different regulators to impose different consent mechanisms. The best example would here be the digital lending guidelines. While the RBI did delve into a lot of detail on explicit consent for different entities, it missed out on the requirement of what the threshold for an explicit consent would be. Now, if we look at global practices and standards when it comes to explicit consent, they are very, very detailed. The intent is very clear, right? A common man needs to know what they're consenting to, what information is being shared, who is it being shared with, how is it going to be utilized. Whether those same parameters that fairly developed jurisdictions with evolved data protection legislations would also apply in India when the RBI mandates an explicit consent is still being questioned by different entities that are kind of struggling to implement these protocols and practices as a part of their daily business. But clearly the thresholds of consent across different regulators with the kind of data that is being accessed is increasing day by day. Digital lending is just one example, right? And it's a fairly recent one. But if I were to look back, we have the Aadhaar regulations that mandate collection of Aadhaar based on consent, that mandate masking of Aadhaar data. We have the credit bureaus that mandate fintechs or entities that are enabling individuals access their bureau scores and bureau reports to do it based on explicit consent, a very clear declaration that they're authorizing a third party on their behalf to fetch this report from the bureaus for them. So clearly these standards are building in. Some require written consent, some require explicit consent, some require consent to be in a very, very nuanced form. My only advice, and I think Adya and I and Matthew, we keep struggling and we keep telling all our clients that depending on whether you are providing one service regulated by one entity, or you are a super app or aim to be a super app working across different sector regulators, at the front end, your UI and UX needs to be very carefully evaluated on how you take these consents, how do you maintain an audit trail for these consents, and what sort of records you have at the back end, right? How detailed are your privacy policies, or how user-friendly are your privacy policies? So it's time that all entities in this domain, at least, that are constantly interacting with the financial sector regulators, start thinking about the processes and protocols they put in place to be able to handle the different consent requirements that different regulators impose. And the same goes with localization, right? The digital lending guidelines very clearly impose localization to the regulators as well as the fintechs. When we look at slightly more nuanced payment data, where we look at the RBI's regulation on storage of payment data, the obligations are very clear. And it's not a very direct data set, but it's everything to do that, everything and all data related to a payment transaction. All of that data needs to be stored in India. If it is being exported outside for processing, needs to be brought back into India within certain timelines. Our guidelines and our regulations are so nuanced, it also imposes obligations on entities to seek RBI consent if you're required to share payments data with a regulator outside India. So all global entities that operate in India today that have licenses across different jurisdictions and are providing financial services in India, if we're required to report any data or share any data with a regulator or an authority in their local jurisdiction, they would have to practically reach out to the RBI for an approval. Clearly, there is a growing need. There is a move that we are seeing from the regulators to try and localize data. While the draft data protection bill only hints at soft localization, sharing of data with certain countries that have certain processes, certain levels of data protection standards that are being followed in those jurisdictions, the RBI is clearly looking at this from a sensitive data perspective. Right, even the draft IT outsourcing guidelines that the RBI introduced last year that I understand should be issued sometime this year now, also impose additional requirements on cross-border transfers, especially when outsourcing is being undertaken by entities outside India. They impose some sort of data localization norms, significant thresholds of confidentiality and data security protocol obligations that must be enforced on every entity that is outsourcing, that you're outsourcing IT aspects to. So localization is becoming extremely important. The moment you have entities that undertake and, like Adya said, kind of deal with different regulators, it's difficult to cut aside and segregate data at different entity levels, which is why your corporate structure at large and your reporting mechanisms and handling of data at an individual level, right from having an inventory to mapping it to ensuring that the data that's governed by a relevant regulator is you're in compliance with the laws of that particular regulator from a localization perspective becomes very, very important. There are a whole bunch of obligations that get triggered when we talk about transfers. And Adya, I think you can touch upon transfers and data storage and give more light on that.
Yeah, happy to. Just maybe before we get started, I noticed Megha has a question. Hey, hi, Megha. Megha's question is, based on your experience, have you seen cyber and insurances obtained by entities suffering breaches come into play in practice? Any advice for organizations on the type of specific cyber insurances one must have when dealing with SPDI? So Megha, in response to your question, yes. We have seen insurance processes, especially cyber liability insurance processes, being triggered upon the occurrence of a breach. Maybe also to give you some more context, a lot of our clients that have, or a lot of the companies that we have seen suffer breaches haven't necessarily had cyber liability insurance in place. The organizations that do, typically what ends up happening is, depending on the sophistication level of your insurer, your insurers have procedures in place that enable companies to deal with the insurance. So you typically have empaneled vendors, empaneled forensic investigators, empaneled lawyers, empaneled ransomware negotiators. And should you choose to trigger insurance, what has been our experience is that the insurance company kind of takes over the process and management of your insurance. What we have also seen is that in certain instances, especially when you're dealing with situations like ransomware, obviously for all kinds of purposes, companies can't pay ransomware. And processes are generally managed by the insurance company at the back end. Now, what you need to look at while procuring insurance, obviously, you will find that when you're applying or when you're seeking insurance, there's a very thorough due diligence that is undertaken. What we have seen is that insurance companies have, especially because of the rise in the number of incidents that have been occurring in India, they've got a lot more cautious. So you can expect a very enhanced due diligence of your existing systems. What you should watch out for are premiums that have gone up astronomically, considering the fact that there's been a significant rise in the number of incidents. And honestly, compared to markets, say the US, Europe, or even countries like Singapore, cyber liability insurance is a couple of years behind in India. So you will see a lack or maybe not the sophistication level that maybe your US counterparts will experience. But by and large, watch out for premiums, watch out for deductibles. And our general advice would be that most insurance companies modify their premiums and their coverages based on existing systems and how in place they are. So you might want to, before you even seek that insurance, make sure you've got an existing framework in place so as to avoid, larger premium coverages. I hope that helps. Just, let me know if you've got any other questions on this front. Maybe touching upon data storage and
Adya, one sec. I missed a part of it because I had bad network connectivity. But did you touch upon the different insurance providers, global, Indian, etc., and our review of all of that?
No, I didn't.
Okay, so let me do that very quickly. So there are 4 to 5 different insurance providers who provide cybersecurity and breach kind of insurance in India. Read through the policies very, very carefully, please, because while it's all called cybersecurity insurance, it doesn't cover the same terrain, right? Read also through the global nature of the policies, if they are, because some of the global policies are actually not global, right? They cover a few countries and don't cover many countries. Look very carefully at the claims process, because we've had to help clients actually go through the insurance process. That's not as simple as you would think it is. It's not that cashless medical insurance that all of us have. So you need to kind of read through it. In my view, and I'm not going to take names, there are only 2 insurance players who provide even close to satisfactory coverage, right? And if you do reach out on the side of the presentation, we'll be happy to give you a detailed our detailed thoughts on which insurance we think is better than which, right? And why. But just be very, very careful with the kind of insurance you take. Remember, like with lawyers, and that's a shameless plug, the cheapest insurance provider is not going to be the best necessarily. So read through very carefully the coverage. Thanks. Sorry, I'll stop butting in now.
No. And I just think another perspective maybe is obviously if you have global operations, if you're headquartered abroad, I do think it helps to seek insurance coverages from global companies, because this has just been our experience. Generally a little more sophisticated. They've been dealing with cyber liability insurance for far longer. It's a fairly new concept in India, right? Over the last 3-4 years. So helps to have a global coverage, especially if you're operating in multiple countries.
Yeah, the only problem with that is, if I'm not wrong, rates have gone up 5 to 10 times in the last 2 years.
Funnily enough, I think still a little cheaper than India.
Still, probably, yeah.
Okay, so Ankita's touched upon consent localization. A large part of structuring your data protection compliance within the financial sector in India also comes down to how you structure your transfers, whether it's cross-border data transfers or whether it's transfers to your vendors, to your sister organizations, etc. And often transfers go hand in hand with how you think about data storage. But maybe let me spend a minute or two on how to tackle transfers from a legal perspective. Now, very quickly, and I think Matthew mentioned this at the beginning of the presentation, it's a common misconception that transfers are extremely simple under the SPDI rules and there's nothing you have to do. As a general obligation, when you are handling personal data, what you do need to do as a transferring entity is make sure that the recipient of data extends a level of data protection that is comparable to the standards set by Indian law requirements. So obviously, the way you think about your contracts, whether they're data transfer contracts, whether they're data processing contracts, or even if they're simple commercial contracts, what we often see is that companies overlook the fact that you are under a legal obligation to make sure that the entity you are sharing data with has a standard in place. So making sure your contracts are well drafted, well thought of, that's number one. Making sure that from a process perspective, you've undertaken a basic level of due diligence on your partner, made sure that they've got their security protocols in place, their adequate confidentiality obligations that flow down. Those are important factors to keep in mind when you're looking at a data management lifecycle. Another thing to keep in mind is, and this is not financial sector specific, but just generally under the IT Act, there are two grounds for processing or transferring data. One is consent, and one is where the transfer is necessary for the performance of a contract. So like Ankita mentioned, consent protocols in India under the IT Act are not the toughest to comply with. So making sure from an onboarding perspective, especially if you're a B2C company, you've got the necessary consents to transfer data, whether it's domestically or whether it's from a cross-border perspective. Making sure you've got the consents in place. And in the absence of consent, you've got a very, very tightly worded contract that enables you to actually undertake the transfer. Again, not extremely complicated, but we've seen a lot of companies overlook these simple processes, right? That if in place would really reduce the amount of liability that you could potentially be incurring. Now, moving on to maybe the financial sector perspective, is that depending on the type of entity you are, and I'm going to use the example of maybe you're a technology service provider or a fintech that operates or provides services to RBI regulated entities. What you will see is that a lot of specific obligations get flowed down to you from an outsourcing perspective. And the flip side is if you're a regulated entity, you have a statutory duty to make sure that you contractually pass on obligations to your partners. So a simple way of kind of navigating this space is maybe analyzing the different regulations that apply to you, especially if you're approaching this as an in-house lawyer, is analyzing the different regulations that may apply to you, and based on that analysis, making sure your contracts are mapped against regulations so that you've kind of ticked off all the checkboxes to make sure that the transfers are compliant with the different regulatory requirements. That's from a transfer perspective. Now, data storage is a fairly wide topic, and I'm going to try to limit it to maybe 3 or 4 points that often come up when we're dealing with compliance. Number one, of course, is your security measures and your confidentiality processes. With security measures, if you are ISO 27001 compliant, there's a good chance that you already have access control mechanisms in place. But if you're not, it's important to evaluate whether your data storage protocols are secure. That is, like it or not, a statutory or legal obligation. So making sure that you've got the security measures in place to actually protect the data that is residing with you is, again, the first step you can undertake when you're thinking about structuring compliant data storage protocols. Of course, like Matthew said, a little earlier, if you're thinking about cybersecurity deeply enough, there's a good chance that you've already got these protocols together. Now, the second one is obviously ensuring confidentiality. Provided you've got good access control mechanisms, this shouldn't be an issue. It's not very complicated. Things get a little trickier when you are dealing with regulators, of course. So, for example, under the RBI outsourcing guidelines, you can't commingle data of regulated entities. So as a technology service provider, very, very important to make sure that your cloud servers, or if you're using physical servers, your physical servers are designed in a way where data is kept segregated. we often find that a lot of companies choose to either not undertake this or to end up mingling data simply because sometimes of the operational efforts that you would have to incur with separating data. But as a general observation and just general advice, very, very important to look at your contracts as technology service providers, see what kind of data storage, what kind of co-mingling or no co-mingling obligations your partners, your NBFC partners, your banking partners impose on you, and making sure that your processes comply with this. Most cloud servers or cloud service providers that we are aware of offer different solutions that help you segregate data. Again, maybe a one-time pain for making sure you're reducing the liability from that front. Another question we get very often is, how do I think about data retention? How long can I store data? Is it 3 years, 5 years, 7 years? I'm not going to take names, but a lot of companies also end up storing data indefinitely. Now, unfortunately, there is no single law that prescribes a retention process. So as a company, what you need to do is create a data map and kind of map a retention period for each data set. Over the last year, we've seen different regulations arise that prescribe different retention periods. So for example, the digital lending guidelines have made retention periods a lot stricter without necessarily prescribing the exact timelines. But what we'd generally recommend when you're thinking about retention is keep data for as long as necessary, but you should be able to justify why you're holding on to the data. As a, just an overarching statement, mapping Limitation Act periods, which is about 3 years, with your data retention periods is a market standard. In certain cases, you might be under an obligation, for example, under the PMLA, to retain data for a little longer. But map each of your data sets and think about each of your data sets, have a reason or have a justification, even if it's from an internal perspective, as to why the data needs to be held on to. While there hasn't been too much litigation on this front, we are seeing this gradually change. We are noticing in line with recent privacy judgments, we are seeing a lot of consumer actions where companies are being challenged on unfair or indefinite retention practices. So that's on data storage. Just to quickly summarize: security, no commingling where possible, and data retention processes. Just before we move on, I think we've got a couple of other questions. I think Arundam has a question on, does our regulatory landscape define specific data types that are subject to localization, specifically if data is not PII and only system data, including data logs or metadata? If data is only collected for sandboxing, what would be the interpretation on a high level? Okay, Arundam, so again, every localization requirement that is imposed by a regulator, the contours of those requirements change. So for example, with the RBI payments data localization requirement, all payments data needs to be localized in India. And you will find that the definition is so wide that it's not just personal data, so that is your name or your bank account details that need to be localized, but things like transaction IDs or the end-to-end data sets. Anonymizing, in our view, and I'm just going to use the RBI localization order as an example, anonymizing or removing personal identifiers from the data sets does not mean you don't fall within the scope of the localization order, because it's that wide. You've mentioned data logs or metadata. If you look at the certain requirements, there is a copy of all logs, ICT logs that need to be maintained in India. So again, what I think as a general observation, localization is not limited to just personal data. It goes it's far wider than that. So And I'll give you another example, right? If you offer cloud services and you're planning on being empaneled with the government of India, or you're trying to offer services to government companies, there is a localization obligation on you to make sure all data processing is conducted in India and not abroad. So simple answer to your question is that yes, the regulatory landscape does define specific data sets, and those data sets will depend on the regulator. That's number one. Number two is, unfortunately, localization is not limited to just personal data sets, but non-personal data sets as well. Anybody have any other questions? Matthew, Ankita? Okay.
No, that's clear.
Okay.
I agree with you, Arya.
Yeah. So Chirag's got another question on, do we still need approvals if we transfer data cross-border to a parent or a sister company? Chirag, yes, absolutely. You do need intra-group data transfer agreement to make sure that you are complying with the SPDI rules, making sure that your affiliated companies have processes in place that comply with the SPDI rules. It's often an oversight, or most companies think that Indian law does not require this, but important, very, very important to make sure that you're able to justify how the data is getting passed on. Okay, Ronak has a question on, under the guidelines on digital lending.
Let me step in there, Radhya.
Sure.
Hi, Ronak. So very clearly, the digital lending guidelines apply to all data that is collected within a digital lending framework, right? And all of the data has to be stored within India. That the RBI, when it talks about digital lending, is not talking about personal data. It's talking about all data pertaining to a loan. Does that help?
And Ronak, just to add in there, while the guidelines are specifically addressed to regulated entities, by default, given the kind of scrutiny in the ecosystem, especially with respect to digital lending, all regulated entities will flow this down to loan service providers, outsourced agents as contractual obligations. And this needs to be more specifically kept in mind where a fintech is doing cards, is doing payments, but is also doing lending or facilitating lending rather.
So on the question of how would you characterize this from the perspective of a lending service provider? Very, very clearly, your server must be here. Can you process some of the data outside India? Yes, but you have to comply with those RBI FAQs on how to take it out and how quickly to bring it in and how to scrub data up there and all of that. So there is one, the storage has to be here. Two, there is a system and a set of rules that govern how you can take it outside and bring it back, but it must be taken outside and brought back and scrubbed clean. Hope that helps. Let us know if you have any follow-up questions here.
I think there's one more question from Megha. Okay, on cross-border transfer, certain laws like IRDA maintenance of insurance records ask for insurance data to be stored and maintained only in India, but do not address explicitly whether a cross-border transfer with instantaneous processing without storage are permitted. How does one make an inference?
Should I?
Go ahead.
Go ahead, Adya.
So, Megha, unfortunately, there's no guidance from Indian regulators on whether the lack of storage constitutes transfer, right? But if you are looking at general global jurisprudence, and let's use the GDPR as an example, remote access constitutes transfer as well. So in the absence of regulatory guidance, I think, and just going by global standards, the fact that data is, for example, not being physically transferred or being physically stored abroad, but is remotely accessed by somebody who is sitting outside of India, by all global standards would constitute transfer. So in line with best practice, that should be treated as a transfer as well. So in answer to your specific question on the IRDAI, and this is my view, might be a little conservative, but remote access of these kind of records that necessarily need to be localized wouldn't work.
Correct. And again, we've sat with multiple different clients and evaluated and helped them choose the level of risk that is acceptable to them. So some of our clients have decided that they will allow instantaneous transfers, and they will put in place the same kind of precautions that you have to put in place for, say, transfers in the payment context with the RBI. So that the idea is, if they're ever called up, they will say, hey, we didn't have guidance, this is all we could do, here are the 20 mitigation steps that we could take. There are other more conservative clients who've said, hey, we're not going to do anything, we're not going to transfer until the regulator allows it to do it. So there's a little bit of a gut call there. Market practice is that instantaneous transfers do happen, but market practice, at least with the larger company end of things, and I know this doesn't always work for startups, but at the larger company end, it's always contractually backed up with fairly watertight protection mechanisms. And storage is always limited, any remnant is scrubbed clean. One good question to ask is, can I allow a artificial intelligence engine sitting in the US to access this data, which has to be localized in India, and then take the learnings outside, but keep the data in India? As you can imagine, that requires a 1 hour session. And I think we should do it at some stage. But there are complicated questions around what we discussed as well. If I could just quickly answer Ronak's question as well. How would the DPDP bill affect the digital lending guidelines? My guess is that the Data Protection Board will start a consultation with the RBI and harmonize these standards. Unable to guess whether the RBI will prevail over the DPB to not allow financial sector, data to be transferred, even in adequate countries. That's still up in the air because we still don't know who's going to be in the DPB. But I would generally expect there to be circulars, notifications specifically on this conflict. I don't think we'll have to guess, and I don't think we'll have to apply general principles of law and interpretation to figure this one out. I think there will be clear guidance coming from the regulator. Okay, I hope that helps. Adya, do you want to go on?
Sure. Now, what we thought would be helpful, and I'm cognizant of the fact that we don't have too much time, is maybe giving everybody an example of how to think about compliance. We've taken a very, very complicated scenario with the assumption that, and let's use this as a case study, right? A company that is seeking to be compliant with data protection requirements and cybersecurity requirements, and is unfortunately regulated by the RBI, SEBI, the IRDAI, and the PFRDA. This might seem like an unlikely situation, but you would be surprised by the number of financial product companies in the market today that are actually in some way or the other, whether directly or indirectly, hit by each of these regulators. So what and how you may need to think about compliance, what we have found helpful, and obviously this is just a template, right? This is a way to start thinking about how to approach compliance. And obviously there's no one size fits all approach. It has to be modified depending on business operations, depending on the volume of data, depending on the nature of the financial product offered. But what we find helpful is maybe to think about certain broad heads and evaluate each of these broad heads and map them against requirements that are issued under specific laws or issued by regulators. So let me give you an example. The first step of any compliance exercise involves creating a data map. A data map basically acts as a one-stop reference point for everybody within the business to identify the different types of personal data they hold. And if you're feeling very ambitious, maybe creating a data map of the types of non-personal data that you hold as well. And then what you do is look at each of these laws and determine whether there are specific requirements that would apply to the instance of data collection. So for example, under the IT Act, you have the SPDI rules that prescribe specific requirements for the collection and transfer and processing of specific categories of personal data. So that automatically forms a part of the checklist. With the RBI, again, customer data for regulated entities is significantly impacted by different regulations. Depending on the nature of product you offer, there may be additional compliance requirements that get triggered. With SEBI, you may not have personal data that is being impacted, but just by way of example, if you are dealing with unpublished sensitive price information under the insider trading regulations, there are specific compliance obligations that would apply to a business that deals with the UPSI. Under the IRDAI, regulated entities are, of course, subject to very, very strict requirements, but personal data and confidential policyholder information, a non-regulated entity that deals with such data is also subject to enhanced compliance checks. Now, that's from a data protection perspective. And therefore, the next step would be identifying whether there are any processes that need to be undertaken when you're dealing with the collection of the data. Do I need to think about consent? Like Ankita mentioned, do I need to think about evolving my UI processes? If I'm getting personal data from another business entity, do I need to maybe think about the contract and make sure that the contract is adequately worded to make sure that the company that's giving me the data has necessary consents, and so on and so forth. Another important public-facing part of compliance is making sure you've got disclosures in place. The SPDI rules require a simple privacy policy, and so do several requirements or several guidelines from the RBI. So making sure that as a part of your checklist, you've included the fact that there is disclosure documents that need to be in place as well. Now, that is the data protection, the personal data protection front. And then things start getting a little trickier. So different regulations prescribe different policies. So the IT Act is a general requirement where you need to maintain your InfoSec policy. But depending on the nature of entity you are, whether you're an NBFC, whether you're a bank, or whether you're regulated in another manner, there are cybersecurity policies that need to be implemented, cyber crisis management plans, IT plans, and each of these policies and plans have specific points that need to be included. Just by way of example, the IRDAI has a 300 control checklist of aspects that need to be included within documentation. Again, a slightly painful process, but it's a one-time pain that makes sure that all your procedures and protocols are in order. We've touched upon localization quite a bit, but as a general part of your compliance exercise, making sure that depending on the data map that you created, you're able to map corresponding localization requirements. When you're a B2C company, there are additional issues on data subject rights that get triggered. Under the SPDI rules, you need to have a grievance officer whose name and details are published on your website and who's able to effectively handle grievances from customers within 30 days. You also have an obligation, depending on the type of regulator you are subject to, having security operation teams, appointing a CISO, having an information security committee, having an IT strategy committee, having designated officers to specifically review cybersecurity attacks. So again, when you are approaching compliance, figuring out the different type of personnel that need to form a part of this exercise, whether it's teams, whether it's a CISO, whether it's a combination of these two, whether these roles can be outsourced or etc., are an important part of the general assessment. We have also touched upon these aspects, but generally when you are approaching this process, analyzing each of these issues under each of these regulators becomes or takes a substantial amount of time. Now, just by way of a caveat, these obligations and these ready reckoners that you see on screen are general. There may be additional requirements that apply. For example, if you are regulated, if you're a publicly listed company that is listed on stock exchanges, whether you're an intermediary under as designated by SEBI, whether you're a loan service provider under the digital lending guidelines, whether you're an NBFC. So it becomes very important, to not adopt the one-size-fits-all approach, but make sure that your general compliance is tailored to your specific business operations and your specific financial products. I also see that it's almost 5 o'clock, so I know we kept aside maybe 5-10 minutes for this, but in the interest of time, maybe should we do a round of questions? If anybody's got questions, or Matthew, do you want to maybe touch upon some of these things?
No, this is fine. I think questions are far more fun than and probably useful than going on about telemetry and artificial intelligence.
Yes. So, and I think we're just on time. So if anybody's got any questions, please feel free. Okay, if there are no questions.
Okay, great. So I hope that was useful. The idea was just to kind of give you an overview. What we'll do over the next months is we'll take subsectors and go far deeper into that. So, for example, a lot of questions on insurtech. That's a sector which we think, one, it has actually, contrary to what most people think, the insurance regulator actually has fairly detailed regulations on a lot of these issues. So we'll do a deep dive there. We've obviously done a deep dive on digital lending before. We'll probably do it multiple times because there's so much confusion in that space. But as the water clears, I think this becomes very, very important. And our discussion with all these regulators have indicated that what is at the top of their mind constantly is the question of how are you collecting data? What are you doing with data? And who are you giving access to data for? And before we drop off, just one point to consider. When you transfer data to tech vendors, be it complicated transfers, say for example, for machine learning and processing, or simple transfers to store the data, say in some kind of a backup server or something, or even if it's the use of HR software or any of that other software where that data is being transferred, India's data protection laws would apply. And to the extent that you are in a sensitive space, in a regulated sector, a lot of this, because like as one person had mentioned in the questions, they say all the data in respect of digital lending would have to be localized. So what does that mean in terms of a I don't know, a processor which is not really important, but actually does some tangential processing of some of the data that comes up, which is not actually the loan data, but data that comes along with the loan. All of that becomes problematic. All of that becomes problematic from a data angle. So think through vendors and third parties to whom you transfer this to. And particularly think through, and on a very, very serious note, think through the use of artificial intelligence and assistance. So we are a bank, about 7 years ago said, "Oh, I want Alexa to say transfer money from X to Y, and I want to enable it." The fact is, the RBI did not allow that for 100 different reasons, including data. So think through any new exciting technology, not just from the prism of business opportunity and possibility, but also from the prism of, even if there is no general law on that particular technology, does cybersecurity concerns and data concerns kind of cast a shadow over what you're proposing to do? And on that note, I think thank you everyone. I hope this has been useful.
Thank you.